Hey there traders, thanks for joining me for this free video from thestockbandit.com. I just wanted to take a look at the indices here as we head into a brand new week of trading. So as you know, we've got incredibly high correlation these days in the market. So we know if we can just kind of follow the cues from the indices, we know that's going to impact and influence how individual stocks move. And so as you and I go to make our trading plan for the week ahead, we've got to stay aware of where the key levels are for the indices and just kind of what's going on in the overall market. So let's take a look back. Last week was a positive week for the indices. In each case, with only the Russell being the exception, the big three indices, the NASDAQ, the S&P, the Dow, all were able to push through key short-term levels and hold above them. So we got a little bit of an acceleration move going to the upside, and that's a positive thing. We had entered into some multi-week trading ranges here. So like for example here on the NASDAQ, by the way, go ahead and shift to the full screen for this video and select the 720p setting in the video player. That will give you the best quality. But for the NASDAQ, we had entered into this multi-week base, this little channel here after this rally up. So that's a really good way to digest the move if you're not going to move down or move back and kind of pull back some. We never did see that. We just rallied and rested. And then last week we pushed through this whole number at 3,000. That was right there. And we were able to hold above that nicely, finishing at 30.55 on the week. So now at this point, short term, we need to be kind of watching the pace of this current advance. We've gotten a 8-day up move. Now every day we weren't up, but we had a minor down day right there on Monday, and then a minor down day on Friday. So essentially we're on kind of an 8-week run here, and it's being outlined by this uptrend line. So keep an eye on this rising trend line. That's currently at 30.40. And in terms of upside levels, obviously Friday's high, 30.60, is kind of the short-term level to watch, but the height of this channel that we just exited, that was 115 points. And so tack that on to the upper end of, or the breakout area here, add that 115, that takes us to 31.15. That's kind of the next projection for the NASDAQ. But right now the bulls are definitely in charge, and they deserve respect. For the S&P, we were able to finally get through and clear of this 1370 level. If you'll recall, that was the high from May of last year, the Bin Laden top right there on May 2nd. And we've dealt with it a number of times lately. We had pushed briefly past it but couldn't hold above it, and never did accelerate away from this zone until last week. And on Tuesday we saw a big strong push higher, and then we added to those gains later in the week, finishing at 1404. So now we've got some space between current levels and this 1370 level that we just crossed. That gives the S&P a little bit of room to breathe, to pull back, to rest, whatever it needs to do to kind of absorb some of this move. But this rising trend line currently stands at 1392. So if we break that, just kind of expect a little bit of a pullback to kick in. It's not a trend change. It's simply the pace of this move up over the past almost 2 weeks would be changing. But for the S&P, we've still got the 1440 level. That goes all the way back to May of 08. So that's kind of the next level to be watching now that we're through the 1400 level. For the Russell, this index is the one standout here which has yet to really participate with a breakout to new recovery highs. Now we're right near recovery highs, and by recovery I'm saying off these October lows. We got the November pullback, we got a December pullback, and we lifted, and then for the past several weeks here, all we've done is churn beneath this big level right up here. It's 833. If we can push through there, then we've got a couple of levels to watch, 843 and then 860, both from July of last year. So we're right here within spitting distance of crossing that 833. We have recently rallied and then just kind of rested here for a few days beneath it. That's a bullish type of look, but we need to get over this hurdle and hold it on a closing basis. So watch that in the days ahead. And then finally is the Dow, which last week pushed through the 13,055 level. That had kind of been this high right here from February 29th. But this index is still holding up very well. And here again, we've got room to pull back and possibly even test that level. I would expect that to at least temporarily serve as some support now that it had been resistance and we're now through there, but a really good run here for the Dow. So Friday's high, 13,289. That's the first kind of level to watch here on the way up, and then beyond that is going to be 14,198, and that's the high from October of 07. So the market's in really good health. Short term, it's running at a little bit of an unsustainable pace, so just look for a little bit of a rest or maybe a shallow pullback to kind of kick in. But all in all, definitely not a market that I want to be caught short. Stay selective on the long side. If you're looking for some trade ideas, check us out at thestockbandit.com. We've got a nightly newsletter, and I share my trading plan with you, and there's a lot to learn. We've also got courses for those of you who need to be better equipped for trading various styles as market conditions shift. But thank you for watching this video. I will have more for you soon, but in the meantime, trade like a bandit.